Regulatory reset actually has been a biggest concern for our cautious stance throughout 2021, and that had played out pretty well in terms of our overall cautious stance about China within the global emerging market framework. Going into 2022, we think in our base case, the regulatory reset is moving towards a overarching framework with institutionalization phase. So it's not the biggest concern as I laid out earlier. I think the major themes we want to recommend for 2022 is, for example, selected exposure to materials with supply constraints and margin support, such as lithium and aluminium. We also like information technology, but we still are relatively cautious with e-commerce and consumer staples, such as food and beverage, because of the slowdown in consumption momentum.
As we look into next year, and we're expecting President Xi to continue to consolidate his power. He's expected to, of course, take on a third term. Are there any sectors that you would want to be keeping an eye out on in terms of investment into for the next year?
Right. We actually recommend investors to look at opportunities that are much better aligned with the tailwinds from the regulatory framework. For example, green economy, cybersecurity, high-end manufacturing, and technology localization. Those are the themes that we would recommend investors to focus on a long-term basis.
Is there anything that you would avoid?
As I said, we are still not yet turning very bullish on the e-commerce side and for the consumption side because of the consumption momentum slowdown. And we noticed that there has been some voice around buy the dip of the consumer service sector, for example, the restaurants. We also don't recommend that because we think the zero tolerance policy for COVID is likely to continue in the medium term, and that would still cap the consumer service recovery.